afternoon, ladies. Guess we're now at past the midday. Welcome to our investing workshop. Our plan for this session is to do a walkthrough on the Smart Money for Her robo platform, where I actually get to be the client. We have Mike Fortunato here with us, who's the advising representative and client account manager with Smart Money Capital Management. And robo platforms are just one way of investing. We've heard this morning a lot about very hands-on financial advice. Robo platforms are much more passive and have lots of different attributes that could benefit various female segment groups. There is only a $500 minimum to get started. And what I like about this, and we intentionally kept the amount low because I wanted to democratize the ability to start investing. There's no excuse to say I only have $1,000. This is a way that you can get started and start to build a portfolio and also use the platform to start learning about investing by actually doing it. So, Mike's going to kind of walk us through some of the questions that typically get asked, some of the questions I've had people ask me, and we are going to open an account. So Mike, welcome.
Hi, Tuula. Thank you so much. Let me just get the screen going here. Just let me know if you can see my screen on your end.
Yep.
You can see me there? Okay, so great, Tuula.
Okay.
Thank you so much for the introduction. So the first stop in getting your account started would be for you to click this Get Started button right here at the bottom of the page. So let's click that.
And while you're clicking that for our audience, I will be portraying a female investor who is doing very well in her career. I have some assets saved up, but haven't started investing at all. And this is so common as I meet a lot of women in their 40s, even 50s that say, I haven't started. Now I feel it's too late. I don't know where to start. All kinds of barriers there. So this is, a great way to get started.
Okay, perfect. So let me scroll back up. So you've clicked the Get Started button right there, and you'll notice it's going to ask a couple questions. So Tuula, how old are you, if you don't mind?
I am 41 years old. Wink, wink.
So let's put that there. And can you tell us what your annual salary is?
I make $75,000 per year. Right.
Okay. Do you know how much you were thinking of investing?
I want to start with just for my savings account, which is $25,000.
Okay. And how would you rank your own investment experience?
I would have to say none whatsoever.
Okay, so you would select none at the bottom, and then you're simply going to click continue. Now, what I should let everybody know is that once you click continue, there's going to be some parts that I've already set up on our end. So the sign up is right here, but I've already done that for you. So we're going to move right forward to the next section. Okay, perfect. So now that we've signed in, there's going to be a few more questions that we need to ask you, Tuula. So
Okay.
Let's just get right started right here. So we know your name already, and the system has already entered that. Oh, let me make that correction there. And we know you're from Ontario.
Correct.
Okay, and you are, we know we're single.
Divorced or single, I guess it's kind of the same.
Okay.
With 2 children.
2 children. And we know you are currently employed with the Women's Collection. So let's add that. Let's just take a second. And let's just put you as an account manager for demonstration purposes.
Perfect.
And we need to put a phone number here. So why don't I put Smart Money's phone number? So 647-985-7626. Now the next step would simply to be clicking this button right here at the bottom that says select goals. So why don't you click that right now? Okay.
Well, this is the fun part.
It sure is. Okay, perfect. So you can see that there's a bunch of different types of goals here. We've got some that we've already pre-created, but there's even a custom goal here if the specific goal that you're trying to save for is not on this list. So we have everything from emergency funds to saving for a vacation, and the big one, which a lot of people are thinking about, retirement. Is there any specific goals that you'd like to pick today, Tuula?
Yes, I will definitely choose retirement, but I'd like to save to go on a really nice vacation.
Okay, sounds
I'm
great.
philanthropic, so I like the idea of saving for charities. And also I know that I need an emergency fund.
Okay, so we're going to go through these four different goals, and we're going to, if you'll notice right away, as soon as I've selected these goals, there's some basic inputs and they're different for all the goals. And that's because each of these goals is going to have different variables that matter. And then before we move on to the next section, you will be able to prioritize these goals. So, and then we're going to review all of the inputs. So why don't we start at the very left with your emergency fund? So you've already told us that your salary is $75,000 per year. Now, the way that we've structured our emergency fund goal is we actually think of saving for emergencies in terms of saving a percentage of your salary. And as experienced wealth managers and financial planners here, we've always recommended the more conservative route, which is your goal should one day to have about 6 months of your salary. So the system already starts with that default. However, if this amount is too large to start for some people, they are able to change it. So for example, you could say maybe you only wanted to have a $30,000 emergency fund, and it'll actually tell you that that's about 4.8 months worth of savings. But maybe to make it simple, we'll just say you're going to get started with 3 months of your salary, which works out to $18,750. Okay, and that's based on your current salary. So the start date is when you are going to start saving for this goal. So our system already makes it so that it's going to be at least a week from today. So let's use that date because you're going to need some time to open your account. And in terms of target date, well, this is the date that you want to have your goal fully saved up. So you can actually enter a calendar date if you knew it, but we actually make it pretty simple for you. And you could just say that maybe you wanted to have this emergency fund saved up over the next 5 years, so that by 2026, near the end of basically 5 years from now, you'll have yourself 3 months of salary saved up, and you can continue saving at that point, or you could consider this goal completed. The next input is it's asking you your contribution frequency, and that's because all of our goals are designed for you to make an initial deposit and then make regular deposits to your account so that your account can grow over time. So just for demonstration purposes, maybe we can pick monthly, but you are able to select weekly contributions or annual contributions if you'd prefer that. But most clients select monthly to add to their account. And then finally, we do ask one question just to get a sense of your own risk reward tolerance and your own appetite for taking risk. And we want everybody to, take this question seriously, but just for demonstration purposes, given your age and your salary, maybe we'll say that you're going to select a medium to high risk. And let me explain to everybody what that means. It doesn't mean we're going to put you in a super risky portfolio or anything like that. It just means that you're selecting a portfolio that's going to be slightly more risky than the other option. And you're telling us that you're willing to take a little bit of risk in reaching this goal by your target date, if you're and you're willing to take that risk in hopes that perhaps you'll get there a little bit sooner. But if you want to have a little bit more certainty without taking as much risk, you could select the low to medium, but however, it will take more funds to get you there. It's a little bit more of a conservative way to get there. But for demonstration purposes, I think the medium to high makes sense for your
Yeah, and I think that's important for everyone to know, in this case, I'm 41 years old. I do have a long-term horizon still. So that, would primarily allow me to take on a bit more risk because I have that period of time in order for if there is some volatility. So that's kind of the logic behind that, correct, Mike?
Exactly. Now, the next goal, and we're going to see a summary of all these goals too in a moment, Tuula. This next goal, the charity goal, do you know roughly how much you wanted to save for that?
10,000.
10,000. Okay. So let's put that amount as your target amount. And again, we'll just say we're going to start saving for this next week. And just to keep things simple, how about I add a few years here? Maybe.
Yes, couple years. Perfect.
Okay. So we've added a few years there. And in terms of the contribution frequency, just to keep things all the same, let's do this monthly, and we'll use your same risk tolerance there. In terms of vacation, moving on to the next goal, and actually maybe we'll personalize some of these. There you go. So you can actually personalize all your goals if you wanted to write in. We'll do this one too. There we go. So for your vacation goal, maybe we're going to save the same amount, or does that sound about
Yes,
right?
I want it to be a very good vacation. So 10,000 is perfect.
That sounds like a good one. All right. And again, maybe we'll take that vacation in a few years from now. Give yourself some time to save for it, and to keep things simple, we'll put it as monthly. And we'll go back here. And then finally, as everybody can see, the retirement goal is a little bit more intensive. And that's because we're asking you a lot of questions because we really want to get a sense of what you're envisioning for your own retirement. So I've changed it to your dream retirement. And we know a few things about you already. You already told us that you were 41. So I'm just going to put the year here of your birth there. And we know your salary already. And actually, we already know you're a female, and there's a few things I want to point out. So as you can see, as we're entering some information here, you're already seeing the system start to make some calculations down here, and it's all based on your inputs. So as soon as I put you as a female, you're going to notice that it's already estimating the duration of your retirement. And this is all based on the average life expectancy for females in Canada. So we got your birthday, and we also know that your retirement goal, the salary that you want to have when you're retired, is going to be based on your salary. So we start with a conservative estimate that you'll need at least 85% of today's salary, which is $75,000. So that works out to $63,750 in today's dollars. Now, you don't have to stick with this. You could actually change this to any amount you want. You could key in a percentage here, but maybe you just want to have a slightly better retirement than what we originally recommended. So maybe you keyed in 65,000. So instead of 85% of today's salary, you're actually saving closer. You're trying to get closer to 87% of today's salary. Okay. So the next question that we want to know about your dream retirement is, how often do you want to receive the money from your retirement account when you retire? So again, we give you the options of selecting weekly, monthly, or annual, but to keep things simple, maybe we'll just say monthly again. So this is the number that this is the selection that when your account actually is ready for your retirement in the year 2045, you want to receive your monthly retirement income. You want to receive your retirement income in monthly amounts. So what you'll notice here is now the system is saying, okay, you want 65,000 for the year monthly. So that works out to $5,417 in today's dollars monthly. So you are basically coming to Smart Money for Her to have us create an account that can get you this much monthly money by the time you're ready to retire in the year 2045. And the system is telling us that you have 24 years to save, and we're just missing two final inputs. The system wants you to tell us how you're going to save for this. So we know you got 24 years to save, but how often are you going to be saving? So again, let's just make it monthly just to keep everything the same across all your goals. And then lastly, again, the risk reward flexibility based on your age, based on your salary, and just to keep things in line with the profile we've created for all your goals. I'm going to select medium to high, but every investor has the option to select whatever they're comfortable with. Now I'm going to just move down. We get to prioritize your goals, and this is how they're going to appear on the summary page. Do you have a preference as to which goals you want to prioritize on the left, Tuula?
Definitely my dream retirement.
Okay, wonderful.
I really want to get started on that.
Okay, and then we'll just keep the order for everything else the same. So now that you've entered the basic inputs for your 4 retirement goals, let's move to the next page by clicking the continue button at the bottom. And that's going to show you a summary of your goals. And we're going to go a little bit deeper into each goal to show all the people watching exactly what happens with the calculations. So a quick summary. Now you can see that all your goals have been prioritized in the order that we just went through. And we're getting a summary of your goals here. So you can see your dream retirement. It's calculating that in order to get to where we told the system, it's saying by the age 65, you're going to want to save roughly $1,287,000 over the next 24 years. And we'll summarize how we're going to get there. So we're starting to save for that immediately. We know that we're trying to get to $65,000 of a retirement salary in today's dollars. Another thing we know is that we're planning for an 18-year retirement, and we know that you're probably going to receive some benefits from the government, both in the form of Canada Pension and your old age security. So we actually do an estimate here. Now, this estimate is based on your age, your gender, and your current salary. So it's just a guess. And it's our best guess as to what you could expect to receive at age 65 from those different pensions that the government is providing. And the account that we're creating here is going to be designed to make up that shortfall. Allow me to explain. So you want to receive $65,000 per year in today's dollars at retirement, and you want that on a monthly amount, on a monthly basis. So that works out to roughly $5,417 per month. However, we know that you're going to get some Canada Pension and some old age security. So if we take that away, then really this account only needs to grow to a size large enough to come up with this much money per month, $4,282 in today's dollars, and we keep it adjusted for inflation here. So that means at age 65, we're trying to get you to a point where this account can generate somewhere in the order of about $7,000 a month of retirement income. And that, combining this $7,000 a month with your annual CPP, should get you up to approximately $65,000 in today's dollars, but at retirement. And that's our goal. We also, so we're adjusting for inflation here, and just moving down, I'll probably click that there. So we're going to now see your retirement start date here. And we've already told the system that for the next 24 years, you're going to save on a monthly basis. And now we're getting to the summary of what your part of this goal is. So you're noticing now that the system is going to recommend an initial contribution. It's quite a large one, and a monthly contribution. But you've already told us when you started, Tuula, that you had $25,000 to invest.
Yeah.
So this initial contribution is going to be too big for you, but so that's okay. That just means you need to add a little bit more on a monthly basis to get there. So that's what this slider does. So to add a little bit more, I'm just going to click on this slider and I'm going to drag you about here. Let's see where that takes us. Oh, so that's probably too much. So let me go down a little bit, just a little bit more, maybe to about 15,000. So you could start with 15,000, and as long as you could add approximately 1824 per month, this is the projection that we have for your account. So let's go through this chart here. So this chart you can see starts at today, and it goes all the way to your retirement start date is right here in the middle where the graph kind of bends. And then this is your retirement period here. And what this chart is doing is it's showing you how your money is going to grow over time. And you can see it starts with your $15,000 deposit, just a little over. And we're projecting both a best case, a normal case, and a worst case. And then as you add your 1824 each month, and as your investments grow with that, you're going to see that over each month, we're making a projection that your account will grow and hit your target by your retirement date in the year 2045, I believe it was at the top. Yes, 2045 right here. So we're going to leave this here. This looks perfect with an initial contribution of about 15,000. And before I move on to the next goal, I just want to scroll down a bit, and we're going to just show you the portfolio that it's recommending. So because this is a long-term goal, you could also see that we've recommended automatically our growth portfolio. And that makes a lot of sense because you have 24 years to save, and you've selected that you were willing to take on a little bit of medium to high risk during those 24 years in order to reach that goal. So this was the portfolio that's recommended. And you can see here, we even show a breakdown of the various asset classes and asset categories where your money will be invested. And this is the breakdown of our growth portfolio. And if you actually hover over this graph here, you're even going to get to see which investments make up each part of the portfolio.
Now, Mike, given, I don't really have a lot of knowledge and I'm looking at some of those names there, are those actual stocks?
So they're not stocks. Instead, at Smart Money for Her, we invest your account entirely in a portfolios comprised of ETFs, which are ETFs is a short form for exchange traded funds. Some of the people listening may have heard of that. Allow me to give a brief explanation as to what ETFs are. Think of ETFs as a basket of stocks, very similar to a mutual fund. It's a portfolio in a single security. And this portfolio is designed to allow us, the portfolio management team, to invest in various asset classes easily. And the reason we like ETFs is because they're a lot more cost efficient than mutual funds are. And mutual funds, as we all know, they've been the main investment vehicle for most investors for decades, but ETFs recently have become the more popular vehicle of choice for many investors and for most portfolio managers, simply because it allows portfolio managers the flexibility and to create portfolios that are efficient and low cost, while still giving investors the ability to be globally diversified across asset classes, which is where you want to be, because diversification equals safety for the investors. It's spreading your bets around so that you're not putting all your eggs in a single basket. Does that make sense, Tuula?
Absolutely, that does make sense.
Wonderful. One last thing to highlight about your retirement goal that we summarized before we move to the next page is you're going to see, because this was the retirement goal, the system is already recommending that you choose the RSP account type for that goal. Okay, so let's keep that the way it is. You could change it if you wanted to, but it makes a lot of sense for you to save for that long term. I think the system has recommended the correct goal, and we're going to start this goal, as we saw, with 15,000. Now we know you have 25 total to work with. So let's move to your next goal, which was Hawaii, and this was your vacation. And sorry if I picked a location that you weren't interested in, but
I was hoping it would say
let's
Bali.
summarize it. This goal. Oh, okay.
But that's
next time
okay.
we could do that. Okay, but only if I can come the next time.
All right.
Okay, so the goal amount, it was $10,000, and we gave you 5 years to save for that. And you're going to be saving monthly, and you chose a high risk reward flexibility. So the only thing is the system did an immediate recommendation of this much to get there, but because of your total investment amount, I'm going to increase your monthly contribution so that you're not putting as much in the beginning. So maybe let's double what your monthly contribution is and see. Oh, that's maybe too much. Let's go about there. So you could start this account with about $1,000, and you would only need to put about 127 a month. And now here's our projection for that goal. So as you can see, it's a shorter goal. It's only 5 years. It's a tighter projection. And part of the reason it's a tighter projection is because we put you in our balanced growth portfolio. So this is a less aggressive portfolio. And it makes sense given that this is a much shorter term goal for you. And again, just like the retirement goal, we're showing you a projection of where you're going to be at the different intervals. And most importantly, you are seeing a breakdown of the portfolio that you're going to get before you ever get there. And because this is, let's say, your next most important goal, maybe we'll put this one in your tax-free savings account. But you could have chosen this all in one account as well, which is a non-registered account type. And your total investment across all of your goals, we're getting close to your 25. We just need to make some slight adjustments here. So that's actually looking good so far. So you also wanted to save $10,000 to give to charity, which is wonderful. You're going to be saving on a monthly basis. And instead of starting with an initial contribution of $3,000, let's try to save just a few $100s here, just so that we could get your total initial investment under $25,000. So maybe instead of $68 a month, let's see what happens when you put $85 a month. Well, there you go. Now you're there. So if you could start, we're making an estimate again that to save $10,000 over the next 6 years for your charity goal, if you would start with as little as about $2,100 today and put $85 a month, combining your $85 along with the growth in our balanced growth portfolio, we are projecting that you would reach your goal in the 6 years, and you may even overshoot it, or you may, we project that you'll be in this range, very close to your goal within the 6 years. And again, it's the balanced growth portfolio, which is the same as the portfolio you were recommended for your vacation. So you'll notice the portfolio details are the same. And maybe we'll just select an all-in-one account type here for that final goal. And because we increased your contribution to $85, we got your total investment across all 4 goals now to under 25. So you could now open your first account with the 15,500, save for your retirement, and then add 1824 a month to reach that goal in 24 years. You could have your initial contribution for your vacation at 1,000, contributing just under 130 a month, and we believe you would reach that goal in 5 years. Same thing with your charity goal and your emergency fund goal. If you could start your charity with 2,000, and if you could start your monthly goal for the charity at $85 a month, and your initial contribution for your emergency fund at just over 6,000 and 160 per month, then we project that you would reach all your goals in your target date that you put in, and within your initial investment budget that you had to start off with. And one thing I just want to point out for all investors, if you find that any of these amounts are going to be too high, so maybe we made Tuula's, we were able to get within her initial contribution amount, but maybe some of her monthly contributions were more than she could afford. Well, this is based on our best guess of the calculations, but Tuula is always able to go in and alter her goals to make them a little bit more realistic if she's having issues reaching them. So for example, if this goal seemed a little bit too lofty, she could add an additional year, and that's going to make all of the calculations a little bit easier for her to do that, and it's going to cost her a lot less per month just by adding another year, or perhaps maybe shrinking the amount of a goal, or delaying your retirement by a year or two. All these things are ways that the investor is able to have more control over their initial contribution amount and their monthly contribution to create a financial plan and an investment plan that works for them. So now that we've gone through all these goals, do you have any questions, Tuula, before we move forward into
No,
the next?
I feel just less stressed already, knowing that there's a plan and I know exactly what I need to do and where to start. So just in the essence of time, okay, so all this is set up, we're good to go. Now what happens? What's just the next step just before we wrap up this session? What would happen now?
The next step would be for you to complete. Oh, I never selected an account type here. Sorry. Select an account type. So now we have an account type selected for all 4. And you're going to click continue at the bottom here. And you're going to notice as soon as we click continue, the system is just processing. You're going to be brought to a typical form that you would see at many financial institutions, but there's a few added benefits. The biggest benefit being that our form is entirely online, so you don't need to go through onerous amounts of paperwork. Now, there's a few things I want to highlight. A lot of this is pretty straightforward, but you'll notice that right off the bat, the correct account types have already been ticked off, and the goals are actually listed beside it, so that each investor knows exactly what they're opening. Then we ask some basic personal information. This is stuff like your name, your gender, your mailing address, your employment status. And if anybody's wondering why we ask these types of questions, it's again because we're opening an investment account. So these are provincial regulations that we all must follow. There's going to be some questions that have to do with your social insurance number. This is because we're opening tax accounts, like tax-free savings accounts or RSPs that have tax benefits for our investors. There's going to be some questions about banking information as well. And the reason we do this is because each client links their bank account to their investment account. And the reason this happens is so that you could send the money automatically to your goals on a regular basis. In Tuula's case, you would be sending the money to your goals on a monthly basis. And then when you retire, we'll be sending money back to this bank account on a monthly basis. And same thing, when you're ready to give the money to the charity, we'll be withdrawing that $10,000 back to this bank account. There's a few more questions down here, and you'll notice too that we actually pre-select the most common answers that investors are going to want to answer. So for example, we ask if you consent to doing the electronic fund transfers. That of course you're going to want to select yes for that. And then we ask some basic questions about, like, if the investor is an insider or a director of a publicly traded company. Again, some of these questions, we've pre-answered them the way that most investors are going to answer them. However, if you are an insider and that sort of thing, you're probably going to know this already, and you're going to know the proper way to fill this out. There's some also questions about if a person is a politically exposed or domestically exposed, politically exposed person, or domestic politically exposed person.
Hello, Mike. So sorry
Hi.
to cut you off. We are in a bit of a time crunch, so we have
Sorry.
run out of time. Um,
Well, we're pretty much done the presentation. I just wanted to show that this is pretty straightforward as the clients are clicking forward. And the only last thing I wanted to highlight is that all the clients, they should rest assured that if they didn't understand everything we showed them, every single client gets a phone call from Smart Money for Her before we ever open the account or put any money into it. Just because you filled everything out online, we still want a registered member from our PM team to have a discussion with you to make sure that we're investing your money in a way that makes sense for your financial goals. Thank you.
Thank you so much, Mike. I look forward to now getting started with my investing and savings.
You're
Thank
very
you for
welcome.
that wonderful walkthrough.
Thank you. Bye now.